Hello everyone, welcome to another video. My name is David and today we are talking about XRP and QNT in regards to the title of the video being these two cryptos could take you closer to the top 1% in my opinion. I am obviously biased because they're my top two holds. I also want to explain why they are my top two holds, but I feel like the information in this video will answer both of those questions as we are heading towards global regulation, central banks exploring CBDCs, launching CBDCs, a lot of them being in the research and development stages, over 100 countries. Two problems that need to be addressed, right? So when it comes to interoperability, banks needing private sector and a bridge currency. These cryptos solve these problems. That's what I'm talking about in today's video in regards to also the digital pound foundation, and the digital euro. A lot of value. Stay around to the end of the video. Leave a like down below. And without further ado, here we go. Okay, so firstly, we have an article here, Quant Network implementing a CBDC, the challenges and a solution by Martin Hargreaves from Quant. So today, CBDCs are close to becoming a reality in many countries and unlocking value and breaking barriers in payment systems. So that's a very important part when it comes to interoperability and Quant QNT, unlocking trapped value in legacy systems and interoperating that value. So what is the problem? Interoperability. What is the solution? So, enabling a multi-ledger token solution to be integrated with any DLT or blockchain. This interoperability approach modernizes domestic payment systems to work with digital assets and enhances cross-border flows. Now, not only is Quant allowing CBDCs to speak to each other, interoperating when it comes to other platforms, a lot of CBDCs not being built on blockchain or DLT. They're actually involved with the development of CBDC when it comes to LatChain and when it comes to the launch of the Latin American dollar, digital Latin American dollar in 2023. Be on the lookout for that. Also, in regards to Ripple and XRP, Ripple pilot a private ledger for central banks launching CBDCs. So further down we can see it's based on the same blockchain technology that powers the XRP ledger, which means that the CBDC private ledger is built for payments. And the private layer, right, it's the same XRP we're talking about here. They are sourcing from the main chain, more demand for XRP. This offers more centralization and more control than to the XRP ledger being open, permissionless, public, and whatnot. So that's the two solutions that are listed. Now on to the Digital Pound Foundation, some common ground, Ripple and Quant. So let me remind ourselves what it's all about. So, whilst most CBDC experiments have involved private sector technology providers, the overwhelming majority of these experiments to date have not included participation from other private sector actors. The Digital Pound Foundation is unique in proposing a model whereby the public and private sectors can fully engage in the design, development, and adoption of a digital pound, thus contributing to the successful rollout and helping drive forward the UK's transition to a digital economy, the digitalization, the tokenization of everything. So here we can see the Digital Pound Foundation Limited. And fun enough, when you actually go to people, you can see Richard Ellis John from Electronium, Susan Freeman from Ripple, and Gilbert Verdi from Quant, and Jeremy from Barclays resigned in 28th of February 2022. So if you go to filing history, you can see down at the bottom into a corporation, just to confirm it once again. Statement compliance, Electronium, Billing Financial, Quant Network, and Ripple Labs. And here we have a piece of information that I quickly want to go over. So I want to read a little part here. It's a Ripple written evidence, Central Bank Digital Currencies Inquiry, Committees Parliament UK, the House of Lords. So Bank of England in exploring the potential for introduction of a CBDC within the UK. So yes, the Bank of England are involved, have a central role within implementing and designing the CBDC, but it's supported by the Digital Pound Foundation. Now we can see an introduction to Ripple, explain the whole process, on-demand liquidity, financial institutions leveraging XRP, CBDC private ledger. We talked about that just briefly. Ripple adapting it for the use that central banks can run a private network, allowing for complete control over the system. Little part on here I'll read. So we can see a public-private approach is needed to ensure maximum utility of any CBDC issue. We believe that private sector solutions, talking about the two problems needed were the interoperability and private sector solutions. So private sector solutions such as the use of a neutral bridge asset like XRP, supported by software solutions like CBDC private layer, could have an important role to play in supporting healthy liquidity markets that allow for frictionless and cost-effective value movement between new forms of digital money in real time. With the tech provided, there are both obvious viable solutions, right? So what's clouding our vision? It always comes back to NDAs, non-disclosure agreements. Here we can see Casper Network in a comparison to Ripple, Quant Network, very, very unknown. So we can see 45 plus non-disclosure agreements, and the majority of them are Fortune 500 and 100 companies, as stated in an interview. That really gives you a scope to see how many NDAs are Quant Network under, how many NDAs are Ripple under. And moving on to an article, here we have the digital pound won't track retail transactions, UK Minister State. So we can see further down, a platform model that wouldn't allow the government to know individual transaction data in regards to a retail-focused CBDC. Andrew Griffith, Economic Secretary to the Treasury. So intermediaries like banks will issue a wallet that individuals would use. He assured members of Parliament the government would not have visibility on the end user's transactions or actions, except under existing measures to protect against money laundering or fraud. Do you take that as truth? Do you not take it as truth? There's a lot of concerns when it comes to programmability, when it comes to time or money run out on a certain date, or when it comes to not buying certain products. You bought too much of this product, you can't buy any more. That is concerns. When it comes to privacy, the human condition will always pick over the easy option, over the hard option. When it comes to your phone, right, pressing accept on terms and conditions, it is difficult to go over the terms and conditions, read through it all, realize how much data they're picking up on you, then press accept. They will always pick the easy option, right? There's so much data on you where they can track your eye color, your hair color. It's ridiculous. Privacy, I feel these people will bang on about it until it's an easy option, then they'll stop banging on about it. Here we also have pivoting towards the digital euro. So just to give some context, and this is more in relation to Quant QNT in regards to the European Central Bank choosing Nexi or chosen Nexi for the European prototype digital euro, right? Digital euro. And Nexi merged with SIA, Nexi Group, and SIA is a partner of Quant, and they rely on Quant as their interoperability solution. And it's safe to say in previous videos, there's so much connections and links from Quant and to the actual digital euro, right? And digital euro needs legacy interoperability. Now here we can see an article quite recent, digital euro to get thumbs up or thumbs down in 2023. So we can see finalize the overall design of the digital euro in the second half of next year as it publishes a second progress report on the project. So further down we can read, the European Central Bank says the Governing Council will review the outcome of the investigation phase in autumn 2023 and decide whether to proceed to a realization phase. Should the project get the green light, EU citizens are unlikely to get their hands on digital euro until 2026 at the earliest. 2026, that is a huge spread we're seeing here with retail CBDCs and wholesale CBDCs. Some 2023 and some here 2026. Now here we can also see the status of these central bank digital currencies. You can actually go to filters, you can go to technology provider, you can go to Stellar, for example. You can also type in Ripple, for example, and you can go further down and see the actual ones that are involved in, like Ukraine CBDC for Stellar, and Bhutan and Palau for Ripple. And so to summarize, we went over CBDCs and digital currencies and why they offer the perfect solutions and why their tech is the viable solution. Now into why more they are my top 2 holds, where I go more into detail in other videos, which I'm going to point you to at the end of the video. But here we have interoperability and cross-border payments. So firstly, cross-border payments, the market volume. So we can see the global volume for cross-border payments is estimated to grow about $150 trillion and continues to grow as more use cases for cross-border payments evolve day by day. Now here we can see a mirror sort of situation with regard to Swift and Ripple to Yahoo and Google. So not the same situation, but here we can just see how the dominator can be wiped out of the market and new arrivers can dominate the market. So Sergey and Larry approached Yahoo to sell Google for $1 million and in 2016 currently valued at $500 billion. Now we can see a process where Bob Way, ex-Ripple employee, explained this perfectly, where Swift saw Ripple as a competitor and Ripple didn't see Swift as a competitor, right? So for example, as Ripple is leveling the playing field when it comes to cross-border payments, when it comes to fees, right? On-demand liquidity, sending money from a small bank near you to another small bank in another country. They go through this whole process, big banks, fee after fee after fee. That's not the process on-demand liquidity, right? It's removing that process, removing that friction, which is a huge, coster for these banks, these big banks involved, not leveling the playing field. Ripple level the playing field with on-demand liquidity. I'm going to use this point in the video to point you to another video that goes more into cross-border payments and bridge XRP, and that's that neutral bridge currency. This one here, I'll leave it in the top right for you guys to check out. That neutral, no country, no political lies. XRP is that neutral bridge asset. Now into interoperability. Now we know that QNT, the token, powers the global financial and capital markets infrastructure, right? Because Quant has solved interoperability via over-ledger gateways when it comes to public, private, legacy, and to enable hybrid solutions, and the over-ledger cannot function without QNT. Now, in terms of interoperability, the most important part is any-to-any, connecting any network to any other network when it comes to any blockchain, any enterprise blockchain, any IoT API, any payment API. There's so much more to that. So I'll give you guys a little video of Gilbert Verdian. Main focuses with interoperability, unlocking that trap value, as we spoke about before, and integrating existing networks, systems, platforms, products into the DLT world. Hope you guys enjoy that video of Gilbert Verdian. That is pretty much it for today's video. I think I've illustrated my points more looking towards the future. CBDCs, new financial era, new digital era we are moving towards, more everything being tokenized. They both have solutions solving interoperability, having a bridge currency, rails for CBDCs, having a private solution. That is the main focus going forward. That is why they're my top 2 holds in those sort of aspects, and generally broad more in interoperability and cross-border payments. The total addressable market outweighing their market cap 100,000 to 1. 1,000 to 1, right? We're talking about percentages of these markets, what we can really see with these assets. But this is for a video. Thank you very much for watching. Please leave a like down below, and I'll see you guys in next.
One of the things that we saw was the coexistence of digital assets with existing financial systems, and that has been talked about quite a lot. The DeFi aspect of it has kind of said you have to put everything on blockchain. That's not the right way for institutions, and what we're seeing is real-world coexistence of digital assets on a CSD, for example, for like a large exchange. And their view is we need to tokenize different forms of assets and put them and coexist together, put them on the same CSD for all their banks and institutions to start using. So that's quite exciting because we're putting tokenization, we're merging traditional and decentralized financial services together and offering that to institutions. And that's the way forward.